Now, back here at home, CORDOS Security has released a 2022 outlook on the global and Nigerian economies, respectively, including the financial markets. Entitled Traversing the Murky Recovery, the report looks at the myriads of complexities facing the globe and Africa's largest economy and makes some projections on what to expect. Gbolahan Ologunro is live here in the studios with me. He's an analyst with CORDOS Securities to discuss this very report. Thank you so much. Good morning.
Good morning.
Great to see you coming to the studio. Your report on the global economy says recovery this year will hinge on a few factors. Give me a list.
Yes, I mean, in terms of how the global economy will perform this year, we think that will be shaped by the evolution of the pandemic, in addition to the policy decisions of global central banks in unwinding the assets purchase program and also normalizing monetary policy. So we think those two major factors will influence the performance of the global economy this year. So
here we are. The U.S. Fed is making decisions today. The FOMC briefing will be later in the evening. What's your take on how do you think Jerome Powell will go with his team?
Certainly, I think markets are looking forward to forward guidance on United States Federal Reserve on when they would commence hiking interest rates. Currently, we expect about at least 3 interest rate hikes in 2022. So we think that Jerome Powell would provide guidance on when actual interest rate hike will commence this year. So probably by March this year, they are going to start hiking interest rates. But for this meeting, pretty much guidance on how they intend to unwind, whether they will accelerate the pace of unwinding their asset purchase program in addition to interest rate hikes.
Yes. Interesting, because some folks are looking at 7. You guys are moderate at CORDOS looking at 3.
Yeah, 3
Goldman Sachs is looking at 7. That means that almost every FOMC this year is going to be a rate cut. But interesting, you forecast Brent crude to average 68 to 73 this year. What are the triggers?
Yeah, so in arriving at our forecast, we analyze the demand and supply side. So on the demand side, we expect a slower growth in demand for global demand for crude this year. And that's on the back of, uncertainties regarding the evolution of the pandemic. If you look at across the globe, vaccination rate is currently below 60%, across the globe. And what is more important to note is vaccination rates across different countries and regions of the world has remained uneven. So that has more or less paved the way for emergence of new mutations. So we think, that will remain a significant constraint if countries decide to reintroduce lockdown measures just to curtail the spread of, the coronavirus pandemic. So we expect subdued demand for global crude this year. Our estimate is around 4% compared to 5.6%, projected for 2021. Then on the supply side, interestingly today, due to tensions between Russia and Ukraine, we've seen, rally in oil prices heading towards 90 levels. But we think that, the likes of United States with strategic partnership with Japan, India will try to release oil from their strategic petroleum reserves just to, reduce or push down oil prices. In addition, we think this year, we're likely to see faster increase in unwinding of production cuts by OPEC+. So if you look at last year, it was more like at a gradual pace, just 400,000 barrels, per day increment, unwinding program.
OPEC is aggressive about putting additional 400,000 back into the market next month, which is February. Yeah. But let's come back home to Nigeria as we speak. U.S. oil is trading 86 and Brent is still climbing, as you rightly put it. So coming to Nigeria, and I'm going to quote this from your report, you said key reforms were not implemented across the downstream oil and gas and power sectors. Tell me more about this. Do you see this petrol subsidy as another chink in our armor, or to get a PIA to get the oil and gas industry right?
Yeah, for Nigeria, the regulation of the downstream oil and gas sector has been a big elephant in the room. So over the years, government has been struggling to push through with that reforms. We've seen strong resistance from labor unions. On the part of government as well, they're also looking at the poor macroeconomic, conditions here in the country. So these factors have limited the ability of government to push through with that reform. Initially, government guided that PMS will be deregulated, prices of PMS will be deregulated by the end of the first half, but recent news is that government is looking for an extension for an additional 18 months, and they're trying to make amendments to the PIA in that regard. In addition,
and amend the
budget as well, because provision was made for first subsidy just for the first half of this year. So they're looking at making amendments to the budget to take account of subsidies for, the second half of this year. But more importantly, we think that because this year is a peculiar year for Nigeria, being a pre-election year, And in pre-election years, it is very difficult, or it is rare for you to see governments coming out with, bold reforms such as the regulation of PMS prices, because, government tends to prioritize political considerations ahead of economic considerations. So we think, it's more of that factor that would make government to push, kick the can down the road. Probably after the 2023 elections, we can then talk about the regulation of the downstream oil and gas sector.
I don't want to get upset as a Nigerian. But again, if fuel subsidy and the conditions precedent for removing subsidy is the poor economic and the social well-being of Nigerians, why don't you fix that so that you can remove it? Because if you put the two together, in the same side of the same coin, fuel subsidy pressurizes Nigerians. Nigerians are not benefiting, and they're paying more for petrol prices. They don't have energy. So I think it's catch-22 or whatever it's called. But again, still on the, do you see the limits to our crude oil production? What limits are there? We listen so much to thieves, by the way. Who else is, what else is giving us concern?
Yeah, so if you look at, as at the end of the third quarter of last year, crude oil production was around 1.7 million barrels per day. If you compare that to, the average historically, prior to the pandemic, we were doing around 2.1 million barrels per day, inclusive of condensates. So I think, due to the onset of the pandemic, we had disruptions to maintenance facilities, and as a result of that, there has been difficulties restarting activities on, some of the oil facilities across the country. So due to the complexities in, getting back those oil facilities back on stream, after you must have shut down operations for a while, that has contributed to, the slow the reduction in crude oil production from Nigeria. In addition, over the years, we've not seen significant investment in replacing those worn-out oil and gas assets. So again, that has also contributed to Nigeria's inability to also produce up to, that quota based on OPEC plus production quotas.
Well, we haven't seen significant investment in those assets, but with the ones we've invested, we haven't seen the results, by the way. So either way, we haven't really made progress.
Exactly.
But here we are in this latest report, quite robust. You talk about the services sector. Your projection for the economy is based more on the services sector, not on industrial manufacturing. So it looks like we're hitting this iron just at the same single point. We're not really diversifying, really.
Exactly.
So do you think this will still help us to maintain growth that has been talked about? The IMF says we'll keep our 2.7% for this year. Thank you, but it's still not good enough.
Yeah, certainly not good enough. The country's population is growing at an average of 3%. So if you are looking at a growth...
Somebody just had a 28th child. So your projection on population, one of the legislators just had additional one. So you might have to increase that as well. It's just increased our population ratio.
Yeah, exactly.
Yes.
So for the country, growth in GDP remains suboptimal. If we are to achieve, improvement in per capita income, standard of living of the population. So what we are still expecting in 2022 is a scenario where, growth remains largely driven by the services sector as opposed to a broad-based expansion across agriculture, industries, and services. And for industries, basically, if you pick out manufacturing, challenges are still quite abundant in that space. You look at the FX challenges, you look at the poor, the high cost of operating in the country due to weak infrastructure. You also look at weak disposable income from consumers, which has even been made worse by the high level of inflation, particularly on food prices. So, for the real sectors, those headwinds are still quite prevalent in the economy, and we think that will continue to limit the growth, in the industrial sector.
So we're going to keep flying with only one engine?
Yeah, exactly.
Yeah, the other engine.
But for services, if you pick the bright spot in that space, telecoms, that sector is doing, fantastically well.
Space.
Yeah, exactly. So we think that for services, we still see strong expansion in telecoms, and that should provide.
I hope you guys have some sections in that report that tell the fiscal authorities what to do very quickly before that engine runs down.
Yes.
Again. So monetary policy yesterday. Let's begin to wrap up on Godwin Emefiele and his teams. What do you think? Do you think the MPC will switch time anytime this year?
Yeah, we think, by the second half of this year, there will be a compelling need to tighten monetary policy.
Tighten?
Yeah, tighten. It's inevitable. And if you look at the central bank governor yesterday, he gave strong pointers to the fact that we would see the impact of normalization of monetary policy by global central banks on the domestic economy from, exchange rates pressures and even the spillover impact on...
So what's going to happen to my financial assets, fixed income and equities, if we tighten something as sometime in July?
2022 should be, a good year for them, a better year for them in terms of yields they'll get on those assets as, if CBN decides to hike interest rates, that will send the signal to, the fixed income market that we are moving to a higher yield environment. So for fund managers, I think, this should be a better year for them.
You're beginning to smile. I know. You're smiling. It's good news for you folks, I know, at the other side of the market. I appreciate that. Thank you. Thank you. Thank you so much for coming through here on GBR. And that's Gbolahan from Cordros Security.